Traders, I'm looking at the NAS100 on the weekly time frame. This is traded down into a key level here. See how it's traded below the candle closes of these candles on the left. This is dipped into big liquidity. We've got sell stops resting under here that this is tapped into. I mean, you can see the reaction on the weekly time frame, this little green candle beside our red candle. We go down to the daily, and also notice how far overextended this is at the moment. So it's overextended, it's traded into a huge liquidity pool, and yeah, that would be appropriate under these candles here on the daily. You've got this range, so you've got the where people, institutions, traders, everyone jumped in here long. They have their sell stops sitting under this range here, so it's definitely raided these lows, these stops, and again you can see the reaction on the daily time frame. My bias is short. However, in saying that, you want to be a little bit careful when it's overextended. I'm inclined to grab a Fibonacci and look at the previous price swing, take it from the high to the low, and I'm always looking at an opportunity in a trend continuation to get involved at least 50% of the previous price swing or better. And you can see my red and blue zone, the 50 and the 61.8 on the Fibonacci marked up here on the chart. I'll just extend these lines to the right, and we'll go down now to the 4 hour. We're going to look for a potential entry on this to the downside. Now the thing is, Friday and Monday, I've done this before in other videos, but you get Friday, we look at this from it's either a daily or a weekly candle. I'll just move something here out of the way so we can grab that Fibonacci, and we'll just do that. Done. Yeah, I like this 50 to 618. So here's the thing: Friday, Monday, okay, end of the week, okay, so weekly candle, and you can consider a daily candle concept with this as well. It's pretty standard. You get, in a bearish market, open, the high of the day, the low of the day, and the close. Right? Same with the weekly candle. The weekly open, the high of the week. Okay, so early in the week it pulls back, it hits stops. We get the low of the week, and then it pulls back. Right, so we see this. This is a 4 hour candle. Well, the daily open is around here. The weekly. Well, actually, let's just go out to the daily and weekly, and we'll mark up these previous levels because I want to have a look at this. We've got a weekly last week, so that's a weekly open. Just mark that up. This is currently our weekly and daily open, and previous week's low. Okay, so previous weekly low. Well, you really should pull it from the candle wick. It's kind of there, righto. And then we want the previous weekly high. So there's the previous weekly high, right? So we've got our weekly, and you can PWH here. You can trade this range. Right? We're looking at this range. Now this is a bearish market, so I'm expecting something like this to occur. So this moves back into the range, internal range here, and then we look to break this and go for this external down in here. Let's just have a look at this now on the daily time frame. 1D. Right, we've got our previous weekly high and low, and then the previous daily high. Okay, PWH, DH, previous daily high, and previous daily low. It's the same thing, previous weekly and daily. You mark this up, and you can go down the time frames, previous daily low, and you've got some a bit of a roadmap on the chart. So I'm thinking, well, that's a daily time frame. You could even reduce this down a little bit, something like that. Okay, so that's what I'm looking at the moment. We'll just get rid of some of this stuff and consider possibility, right? Daily time frame, that if this is in a strong bearish trend, well, I'm thinking this daily range up here should stay intact. So we have this value area on the daily here, right, the high and low of that. Let's just go down to a 4H and have a look and see what that looks like. So on the 4 hour, we've got this 4 hour bearish order block here, right? Okay, so we're just dropping down time frames and mapping out the chart. So 4H, take that off. So we've got a nested daily range and 4 hour order block here. Order block as in this traded off with speed, and we have one-sided trading bearish. Now that's pretty strong, so you can see that institutional, well, smart money got involved with that, and this is their, where they, this is the distribution range through all this whole range through here. Drops down, and look, a couple of things on this time frame that we need to be mindful of. One is this red candle here, imbalance. All right, so we've got this 4-hour imbalance that could be a target for this to pull back into, looking to rebalance. So mark it up as a point of interest, and just be aware that that's a possibility. Market looks for liquidity and it looks to rebalance. Right now, I mean, it could just head further south and leave everything behind, but yeah, be careful, guys. It's Monday, so just let the market settle, and we'll just see how far this retraces. I mean, they could do that now, and I'll explain this to you. Let me see. Just see if I can show you an example. Quite often, I mean, here's a bearish example and a bullish example. Righto. This is the sort of thing you want to watch out for. The algos set this up and entices buyers in, and they create this really nice pattern. Here it is again. Look, I'm always suspicious of whoever's controlling this show. Wow, not much of a pullback there, right? But a trend, higher highs, higher lows, and it's happy days. But more often than not, you're going to see 2 or 3 times within a trend, see this higher low here getting taken out, trades up, and buyers pile in this range here. They pile in long. What do? Look at this. This is a raid on stops that are sitting under here. That's exactly what that is. 100%. Algos are designed to raid stops, and you're getting it again here. Sets up this nice kind of higher, lower lows, lower highs. Well, yeah, that's a bit of a raid on these stops here. Down we go, pull back. Well, kind of traded sideways. Then we get that. And then look what happens. There's a bunch of buy stops sitting up in here that gets taken out. These get hit, and then look how the market tanks after that. Right, so you need to be aware that this is a very real possibility, especially when there's an imbalance above that could be a target for the market to rebalance. And it's hunting liquidity, and there's a ton of liquidity above this range up all through here. Now it could just very well do that and roll over there. That's a possibility. Or it could pull up a bit higher. What you can do is you can watch it, and look, Mondays I'm always a little bit suspicious. Okay, I'm getting a lot more suspicious these days. Midweek they've been running these moves, taking out stops more often than they have been previously, that I've noticed. Anyway, I mean, you could watch this, and on the lower time frame you're going to see this pullback start to rotate. All right, so that's another way you can approach this, is to go down to a 15 minute and wait for, well, see how you get this break of market structure, bearish break of the low. This is all you need to wait for. If you're in front of the chart, this is a break of structure like that. Okay, so on the pullback, we don't know how far this is going to pull back, but I'd be inclined to stay out of this for a while and just let the markets kind of settle in. It's Monday. If it trades up to here and we start to see a bit of a range forming, keep an eye out for a fake out and a shakeout. This is the fakey shaky chart pattern, by the way. Okay, this entices sellers. They pile in short, all their stops go up here, and then they get hit, and then the market sells off. Now just watch for this pattern. And I mean, look, it could happen here. It could happen further up. Right, so we got a couple of levels marked up on the chart now from our markups, and let me just do this. All right, so bear with me. No, I've lost my whole thing. Hang on, guys. I'm just going to reverse that. See if I can recover my drawing here. Oh dear. Okay, let's do this. All right, this can happen. It could happen through here. They might target this range, or they could hit the liquidity above the range and go for this imbalance. Okay, that could be a thing. So wherever you see this ranging sideways, a bit of volatility, and then you get the break of structure, that's the opportunity to jump in, right? Break of whatever, okay? The break and retest of the low of wherever this sets up on, and I'll be watching it on a 15-minute time frame. So that, and look, my bias is bearish, but where this rolls over and continues south is the question at this point. So watch it. We got the London Open, and then we got the New York Open later tonight. Monday, Tuesday, the trend should settle in, and then we should see some really nice opportunities. I think that the stock markets are going to tank, but just watch for these pullbacks that get pretty aggressive. I'm more inclined to, expect something like that, to be honest. That's my take. Look, I'd love to hear your thoughts on this, so definitely leave a comment below. That would be awesome. And with that, I hope you have a fantastic day, safe trading, and we'll see you in the next one.